What's up, guys? Welcome back to Gen Z Wall Street Millennials. Many investors buy foreign stocks for portfolio diversification. In particular, Chinese companies have become popular as people want to own a piece of the world's second largest economy. With the US stock market being the biggest in the world, new Chinese companies are going public on major US exchanges on almost a weekly basis. The New York Stock Exchange expects 60 Chinese IPOs in 2021 alone. However, investors must be especially cautious about Chinese listings. The Chinese government is notoriously relaxed in regulating their companies. The country has far more than its fair share of fraudulent companies. In this video, we're going to be taking a look at one of the most blatant examples of Chinese fraud. One of these cases of Chinese fraud was exposed just 1 year ago in 2020. We're talking about none other than the now bankrupt Luckin Coffee. Starbucks was growing rapidly within China. There was money to be made in the Chinese premium coffee segment in 2017. Jenny Chan and Charles Liu decide to make their own coffee company to compete with Starbucks. They opened their first store in 2018. They made a premium customer experience. The interior of the store had a sleek and modern design similar to that of Starbucks. Their key differentiator was their focus on technology. The stores didn't accept cash and customers could only pay with the Luckin Coffee app. Customers could order on the app ahead of time and pick up their coffee as soon as they arrive at the store. They also claim to use artificial intelligence to pick the best locations for new stores, optimize pricing, and perform supply chain forecasting. In July of 2018, just a half year after opening their first store, they raised $200 million from investors including the Sovereign Wealth Fund of Singapore. They used this money to advertise, aggressively hiring celebrity promoters and posting digital advertisements throughout Chinese media channels. They also use aggressive discounting to lure customers. New customers received a voucher for a free drink whenever they signed up on the app. Their marketing strategies seem to have been working well as it allowed them to grow rapidly. In October of 2018, they opened their 1,300th store, making them the second biggest coffee company in the country, second only to Starbucks. In January of 2019, they had 2,500 stores. They raised an additional $150 million from investors including BlackRock, which they would use to open more stores. By the middle of 2019, they had a compelling story to tell investors. Besides their savvy marketing, they also developed new technologies such as automated coffee kiosks. They had developed a strong brand and became the number 2 coffee company in less than 3 years. They took this investment story to the US, where they IPO'd on the Nasdaq for $4 per share, under the ticker symbol LK. This gave them a valuation of $2.9 billion. Notably, this was the first time since the tech bubble of the late 90s, where a company achieved a $3 billion valuation in less than 3 years. The IPO was quite successful in the third quarter of 2019. The company reported a nearly 400% growth in customer traffic. While their aggressive advertising caused them to post net losses, they claimed their profitability on a per-store basis was rapidly increasing. In light of the bullish news, the stock peaked at over $50 per share in January of 2020, giving the company a valuation of $9 billion. However, not everyone was buying Luckin Coffee's success story. On January 31, 2020, the short-selling firm Muddy Waters tweeted a link to an anonymous 89-page report. The report alleged that the company had artificially inflated their profits by up to 88%. The author of the report said that they hired hundreds of people within China to conduct over 10,000 hours of video surveillance. Based on how many people entered each Luckin store every day and how many items the average customer bought, they made an estimate for how much revenue each store and thus the entire company was making. Luckin was reporting revenue of 88% higher than the estimates that they made based on the video evidence. They concluded that Luckin was fraudulently inflating their sales to push up the stock price and raise money from unsuspecting investors. Based on third-party advertising data, they also found that Luckin Coffee inflated their advertising expense by 150%. It might seem weird that a company would inflate their expenses, as this decreases profitability. However, at the time, investors didn't care about net profit, and as long as revenue was growing, the stock could continue to rise. By inflating the advertising expense, this helped them explain why their cash reserves were declining, despite the fact that they are supposedly making so much revenue. Luckin Coffee vigorously denied the allegations. They claimed that the report was malicious and the authors did not understand the company's business model. To clear up the controversy, they announced an internal investigation to prove their reported financials were legitimate. As the short report was anonymous, many people doubted its credibility and initially gave Luckin the benefit of the doubt. The embattled company also received unlikely support from Citron researchers. Citron tweeted they were long Luckin Coffee and confident that it was not a fraud through their own research. They thought the coffee chain's business was on fire and the anonymous short report was not accurate. On April 2, 2020, Luckin released the findings of their internal investigation. They confirmed that they had in fact fabricated $310 million worth of sales in 2019. This cleared away any doubt that the company was fraudulent. The stock shaved 80% off its market value that day. Within a few weeks, the company fired its CEO and COO, who were both involved in the fraud. The company also received a notice from the Nasdaq saying that they would soon be delisted. Ironically, Luckin Coffee saw a boom in their business. In the days following the fraud being exposed, their app's daily downloads surged from 45,000 a day to 325,000 as new customers wanted to cash in on their free promotional drinks. Unfortunately, since these drinks were free, Luckin was not able to make any revenue from them. One Beijing resident told Reuters, "I'm not that into coffee, but it'd be a pity to lose the chance for a free drink." After all, you don't know how much longer Luckin Coffee can hold on. In September of 2020, the Chinese government fined Luckin $9 million for the fraud. The SEC settled with the company to pay $180 million in penalties for intentionally deceiving investors. Despite the revelations of fraud, the company continued to operate its stores. While the stock was delisted from the Nasdaq, it still trades on the over-the-counter markets under the ticker symbol LK. Surprisingly, its price has experienced a strong rebound, increasing 800 since its lows. On May 22, the company continues to burn through cash. Without being listed on a major exchange, it is very difficult for them to raise capital. In February of 2021, they filed for Chapter 15 bankruptcy protection. This move will protect them from US creditors while they restructure their business within China. The bankruptcy proceeding will not impair the company's day-to-day operations in China, where it continues to run retail locations. While the company has posted updates about their legal proceedings and restructuring plans, it appears that they have not published any financial results for 2020 or 2021. We have no idea how their business is doing. This makes it all the more curious why investors were willing to bid the stock price back up to 12 on the over-the-counter markets. In response to the Luckin Coffee debacle, as well as other high-profile frauds, former US President Donald Trump signed into law the Holding Foreign Companies Accountable Act. This law requires all foreign companies listed in the US to be audited by the US's Public Company Accounting Oversight Board, or PBAOC. Currently, the Chinese government does not allow the PBAOC to conduct audits of companies headquartered in mainland China. If the two countries cannot come to an agreement about these issues by 2023, many, if not all, Chinese companies listed on major US exchanges could see their stocks delisted. Alright guys, that wraps it up for this video. What do you think about Luckin Coffee's fraud? Why do you think that Luckin stock was able to rally 800% off its all-time lows? Let us know what you think in the comment section below. If you like the content, make sure to like, subscribe and share this video. As always, thank you so much for watching and we'll see you in the next one. Gen Z Wall Street Millennial signing out. Peace.